What's up, guys? Eric here, Mr. Fired Up Wealth. Want to bring you a quick real talk here. Market turmoil again. Another market sell-off, stock market sell-off, market crashing. I know you guys have lots of questions, and I want to be here for you. I've been in the Discord Patreon community all day. You can see the Nasdaq's down 3%, S&P's down 2.17, Dow Jones 1.43, VIX has spiked 29% over 31. So definitely seeing some volatility. Why? Of course, because Russia looks like it might take military action on the Ukraine. So headline, Dow sheds 500 points, oil jumps on fear Russia could soon take military action on the Ukraine. Stock slid on Friday as increased tensions between Ukraine and Russia sent oil spiking and led investors to dump risky assets. Especially growth stocks have been hit really hard. My portfolio is down, I think 3.5%, maybe 4%. We've got a little bit more beta. You know, Nasdaq, you saw, is down 3% now, 2.5% at the time of this. With 2 hours left in the trading day, the U.S. National Security Advisor Jake Sullivan said at the White House briefing, I watched this live, it was streamed, that there were signs of Russia escalation at the Ukraine border, and it was possible that the invasion could take place during the Olympics, despite speculation of the contrary. And we'll also, of course, have the Super Bowl on Sunday. So this is a very interesting time, and the stock market already is very fragile. There's a lot of, there's just a lot of fear in the markets. We've got interest rates, inflation, all these different things going on. And so what's going on? What's my take? What am I doing? At this point, I was actually buying some stocks this morning. I was sharing it in the Discord. In fact, I made a Patreon exclusive video showing technical levels. Of course, guys, when something like this, a macroeconomic event happens, it basically overrides or trumps any technical, chart you have or indicators, all that. So it's very hard to know where to buy stocks. Sometimes it turns out to be a great long-term opportunity because people, sell on panic, they knee jerk, it ends up not being a big deal, and you end up getting some good prices on stocks. On the other hand, if they actually invade, the market probably takes another leg lower, and it was already fragile. We already had some technical damage. We were trying to rebound. We were getting to a point where a lot of charts were starting to look pretty good. When you look at some of the charts, we were looking at a few stocks that I was buying today, and the charts looked good. I added to 3 or 4 different positions that I already own and was nibbling some shares. And of course, thought I was getting a good deal. And and then an hour later, the market tanks and takes leg harder, and all those stocks are now lower. And that happens. It's okay. I've got some cash. I sold a couple things to raise some cash in the portfolio. And I've been very transparent with the Discord community. If you guys want that day-to-day interaction, I'm on Discord pretty much all the time, keeping the community up to date. But I wanted to bring this video to you just to explain what's going on, kind of tell you my take, what's happened historically. Now, I've been in the market for almost 25 years, and so I've seen this happen time and time again. Most recently, you think back to the trade, back in 2018, we had trade tensions with China. We had Fed tapering with interest rates. Then market was in turmoil, selling off. We had a correction. We also had North Korea that was firing rockets and things like that towards Japan that would go into the middle of the ocean. And so, this is one of those things where it's going to have to play out, and it's just an uncertain period. So me personally, I did raise a little bit of cash. I did buy some stuff this morning. I basically raised that cash back the best I could. And so I'm sitting on my cash position, just trying to be patient, still looking at individual levels of stocks and trying to use technicals. But like I said, technicals at this point, guys, they don't really mean a whole lot when the market's just selling off. And, it's very, very difficult in these periods to know exactly what to do. What I will say is that long term, it always sorts itself out. I can't tell you what's going to happen today or tomorrow, next week, next month, but I still think that, stocks are higher a year from now and all this stuff sorts itself out. The hard part is when to buy. And if you're new to investing, it can be really challenging because you see your portfolio go down, you get a little bit of a pop, you get excited, and then the stocks turn around and go the other direction. And it's really frustrating, and I totally understand. I'm down, just to share with you guys, my portfolio high in November was $1,870,000, and I was back to about $1.6 million a day or two ago, and now I'm back down to $1.5 million. So I've lost $100,000 on paper in a few days. And, there's always different camps. If you're in that trading camp, you're new to investing, you're like, that's scary to you. Why don't you just sell and buy it back later? And that, if that's your prerogative, that's what you want to do, fine. For me personally, if I sold my portfolio, I'd have massive tax ramifications, and I'm trying to think 2030. So 2030 is my target, and that's where I'm targeting for basically financial independence, where I'm going to live off those dividends and that passive income. Right now, I'm still focused on growth. I do have a core of high quality growth stocks. So you think of like the Microsofts, the Googles, the Apples, things like that. Those make up my core. I have some ETFs as well. Another thing I wanted to talk to you guys, I've been meaning to do a real talk, and I'll just bring it to the YouTube community because it's important to share this knowledge with everybody. Stay away from margin, guys. My number one rule to investing, don't invest money that you can't afford to lose. In other words, if you need the money in 6 months for a down payment on a house, don't invest it. So if you have the actual cash and you need it and you can't afford to lose it, you shouldn't invest it. And you definitely shouldn't invest someone else's money, okay? I can't tell you what to do. I'm not a financial advisor, but I've very rarely seen it work out very well. Margin's really for experienced investors that are using margin, that have assets that can bail themselves out, that just want to use that capital elsewhere. And generally people that have lots of experience in the market. So if you're a new trader and you're trying to be, an options trader and you're using margin, if that's what you want to do, it's your money. But I'm telling you guys, it's not worth the risk. And I've seen so many people blow up their margin accounts. You can't control things like what happened today. You can look at all the charts you want. You can look at all the information you want. Things are looking bullish on a specific stock you want to buy. You think it bottomed, and all of a sudden Russia comes out, or we get news that Russia might attack Ukraine, and the whole market just collapses. So you guys have to be careful with margin. Don't use margin. You can see we're recovering a little bit here. I think that the reaction would be even worse if it weren't for the fact that we were already beat down. Now, if you look at key technical levels, I'll bring up a chart here. Let's look at a couple charts to see where we're at. Okay, so if I bring up the QQQ, the Nasdaq 100, the lowest price, May 2021. So in other words, the lowest price we had in this sell-off went back, if you draw this line, all the way back here to May of 2021. Okay, this yellow line. That's where we went. In fact, we broke that and went to this red line. So this red line here is May of 2021, not the yellow line, the red line. So that's what I'm talking about here. Lowest was May 2021 prices. And it bounced off of this red line, basically that low. And this is saying, hey, here's the trend line. So the trend line was up here. We were running hot. We were above all the moving averages, the 50, the 100, the 200-day, the trend line. We broke down. We went pretty low on the QQQ. We got almost to bear market territory, almost to a 20% correction. I think we were 18 and 19% from the highs. And we were starting to look pretty good here. We kind of, this is normal to have some ups and downs. You're not just going to go straight up in a V. You're going to have some consolidation, especially you think if people buy in and they've got, weak hands. And so the market, the stock rips 10 or 20%, they might take profits. You're going to have some ups and downs and some swings. Well, now this is taking out this other $350 mark today down to $344 or something like that. We still have a little room. If I draw a circle here, we still have some room for that lowest point, but we're not in a great area from a technical level. And of course, if the news gets better, all of a sudden we get good news, you could see a pop to the green. But if the news gets worse and the invasion actually happens, well, that we could retest, that we could even go lower. So if I look at the SPY, that's the S&P 500, same kind of deal. We already had lows down here at 421 or whatever this number is. So we've got a buffer here, but now you can see we broke past this 200-day moving average. So this red line is the simple 200-day moving average. This yellow is the 100, and the green is the 50. So 200, 150. Now we broke past that. It doesn't mean anything. You could come back and you could go bullish, but right now there's going to be fear in the market. You got to be careful. So this is a really tough time. I recommend that you try to have some cash. You've got to have a watch list. I've got one written down on a piece of paper. I've also got one in my Fidelity account, and I'm watching 20 to 25 stocks, and I'm just trying to add at levels that make sense. So I'm looking at technicals. I'm also looking at what I own, what I want in my portfolio, my blueprint, and saying, here's what I'm going to add. Now, if you're a new investor, you're young, investing for beginners, you probably want to do what's called periodic dollar cost averaging. So every time you get paid every 2 weeks, you might take $100, $500, whatever you have, and you might put some into a couple ETFs. You might buy a couple individual stocks. I personally like having a core of ETFs like the QQQ, like the VU. So the SPY is what we use, usually for trading. If you're looking for more of a long-term investment, the VU has a lower expense ratio. And so, you know, you can have a little bit of VU for the S&P 500 in your portfolio. You can have a little QQQ for the Nasdaq 100. You know, if you want, you can look at other things. There's, of course, the ARCs of the world and the technology type ETFs, the thematic ETFs, they call it. And then you might want to pick a handful of individual stocks and dollar cost average ins. You know, periodic dollar cost averaging works. I also do dollar cost averaging with specific buckets. So if I want to add a specific stock, I might buy 5 different lots and buy, you know, say if I want $10,000, I'll buy $2,000 and buy it 5 different times and try to get in, you know, in different levels. And there's no right or wrong answer. Some people want to try to time the bottom. That's really hard to do. It's really up to you. But what I would say is, you know, I'm not going to panic sell and sell my whole portfolio over this. I'm going to try to get cash, you know, raise a little cash. If I have less conviction in certain stocks, maybe I trim or sell those. I'm not saying that, you know, liquidate your portfolio. Just, you know, say you have 20 stocks and one of them's like, I don't really like that stock that much. I'd rather take that money, pivot that capital in this other stock that I have more conviction on. And you might take that and you might do something like that. Or you might just raise some cash, some profits, trim some profits if you have something that's run really hard. And then, of course, you're going to have money coming in from your job. And every time you get paid, you're going to put it in the market. So I'm not panic selling. I'm looking for opportunity to continue to buy. I did raise a little bit of cash, but very minimal. I raised about 1% of my portfolio additional cash so that I have that for opportunity if the market takes a little bit leg lower. There's stocks on my list that I want to buy. And if you're interested in my actual watch list, I've got a video on the Patreon Discord community. So if you go to Fired Up Wealth Patreon, so it's Patreon, Fired Up Wealth, and you can see I've got a video. It's like 10 or 15 minutes. It shows the 20 stocks that I'm trying to actually add to. And I did add to a couple of those stocks today. So definitely check that out if you want. But I just wanted to bring a quick video. I tried to do a live stream, had some issues with it. So I just did a quick recording here. Some real talk for you guys. I appreciate you. I hope you have a great weekend. Try to relax, grab yourself a drink, and just try to chill out, not think about the market. You know, pray for the best with the situation with Russia and the Ukraine. And have a good weekend and enjoy the Super Bowl the best you can. I appreciate you guys. Take care.